Good day to you all and welcome to the fortnightly meet the team here at Stable refer to as the Payments Paddock. I'm your host, Craig Agter, and joining me as always is Stable's perennial spokesman, fledgling social media personality and managing director, Alistair Hesketh-Hudson. You've probably seen him across LinkedIn. He's everywhere these days and he's here with me today, which is wonderful. Al, how have the last couple of weeks been for you?
Very good. Yeah, I've migrated some of the recording studio sessions from the home office into the garden, which has been a real delight.
Yeah.
Bringing a bit of nature to it.
The alfresco Al that we've sort of seen in
no
your
one
garden.
asked for, but they've got.
We're gonna. You should do a bit of a pan around the flower bed or something along those lines to sort of give us a bit of a view of how green fingered you are.
If you look at, next time I record it, if you look above my left shoulder, you'll see there's a bird feeder and a squirrel feeder. And where I'm based in London, it's quite amazing. You get parakeets, there's squirrels, there's lots of wildlife. So I'm hoping during some of the sessions I record, there'll be a live visitor in the background.
Absolutely, we need some wildlife cameos, don't we? I mean, we've seen Dylan, popping into frame. Your lovely pooch occasionally. So yeah, it'd be nice to get a bit more animal guests on the show. I suppose with that being said, should we get into it? So now it's time for us to look at the payment places. So this is the equestrian pun littered segment of our show where we cover what we consider to be the top 3 news items you need to know about in the world of payments and fintech. In case you've never heard of us before, Stable's mission is to empower and enable finance teams to do more with less, reduce financial wastage, and help them become engines for growth within their businesses. So you can think of us as your finance Ned, essentially. Al and I will be providing our take on why these stories matter for UK businesses and finance teams. Just to note, first of all, that all views are our own and do not necessarily reflect those of our company, Stable Payments. But if any of them strike a chord with you, please do reach out to us here at Stables. We'd love to hear from you. The email address to get in touch is info@stablepayments.co.uk. So I suppose without any further ado, should we get into the main segment of the show, Al? What have we got lined up today?
Well, it's our old friends, Miss Soul Car Finance, which I was just reading one of the adverts. I'm sure everyone has been peppered with them. I get regular spam texts and it's everywhere. But
I got one yesterday. I was immediately deleted and blocked because I've never taken car finance. So they're targeting from an outbound perspective is a bit haphazard, bit shotgun-esque. But yeah.
Well, the Martin Lewis advert with him officially backing it has been taken down by the Advertising Standards Agency. So it's all a bit messy, but it's moving in the right direction. There's a few reasons why it's interesting to us. From a lending perspective, a lot of the providers that have been caught up in this, there's like a commercial front to it, but if you peel back the layers, there's typically a bank involved. And that's going to affect their future appetite for lending. It's going to affect the regulation, and the real losers will be future borrowers. Small businesses that want to be able to take out finance products on new vehicles or new equipment, or maybe something as simple as financing a long invoice. They're the ones that will suffer. But it's gone. There's been another challenge. So they'd finally agreed some times and dates this summer to agree payouts. The average now is going to be about £830 per person. But in the last couple of days, there's been another challenge, effectively saying that the regulator is going to. It's a lowball. It's a lowball. So I think it's the consumer.
They're not
voice.
happy, are they? It seems. I think they're worried that there's. That there's more being left on the table, and especially, I suppose, if you look at the scale of this compared to, I guess the biggest analogy or the analog that we've got from previously is obviously the PPI banks, reclaim or refunds. That was of several magnitudes larger than this, wasn't it? So I think there's probably an element, not of ambulance chasing per se, but there's an element where they think, well, actually, we've got precedent to push for more, and that we feel that they're that it should be uncapped essentially, because I think the issue is that this is a uniformal redress scheme, isn't it? It's
Yeah.
one of those where everybody gets essentially the same thing. So yeah, I just kind of do wonder a little bit if this is going to be one that rumbles on for quite a while. And like you said, like the knee jerk reaction for all of these companies and these finance companies and banks is to withdraw products and to be very risk averse because they're worried about the prospect of being wrapped on the knuckles in the future, because all of these impairments that the banks are sort of taking, it's kind of coming at a time that's very, where the financial system looks increasingly fragile, and trade links are breaking down and costs are rising,
Mm.
inflation's rising. So it's really interesting to see how this one plays out.
Yeah. So it's not a done deal yet. So the general feedback is the FCA have applied a far too narrow logic to how they calculate the compensation, and it's it wouldn't surprise me if there's another last minute injunction or a calculation. But yeah, to highlight some, it's going to be a net negative for small businesses in the UK.
I think I
But
think also, in addition, it knocks general trust, doesn't it, of the public, UK SMEs. As soon as they see headlines like this, they roll their eyes and they're on their guard. And perhaps in instances where it makes business sense to take a working capital loan or something like that, it may be one of those where they go, well, I don't trust the sector anymore, and that is probably a pockmark that's going to take much longer to heal or recover from, I think.
yeah,
But
agreed.
yeah, oh
Next
dear.
up, we've got something very, very different. So this is fascinating. Um,
Yeah.
TikTok, everyone will know TikTok, and Visa have teamed up to launch their own debit card. The reason this is so interesting is that the world of digital content in itself is a new concept. The idea of an influencer didn't exist. 6 7 years ago, and effectively, for people that don't really grasp the enormity of this market, these individuals have effectively created a go-to-market um, proposition for themselves, and brands will latch onto them, and they will use these individuals to promote their services. All the way from regulated financial advice, which has got people in massive amounts of trouble, all the way through to people that sell fitness or um, car equipment. It's a massive, massive market. But if you are in the content creation space, from a banking and a payment perspective, you are a challenging customer, tricky customer, because some of them are unable to um, sufficiently audit the type of content you're creating. Is it harmful and damaging? Does it promote violence? Does it promote extreme views? Does it promote adult content? It's very, very difficult for people to control that, because it's an open platform. One minute
Yeah.
you could be promoting a car program or a car service, and the next you could be promoting extremist views on immigration, for example. So this is really interesting. The fact that Visa and TikTok have actually decided to tackle it head on and create a debit card that content creators can use. From what I understand, it's a relatively new article. It's only been out a few days, but content creators are able to earn money in real time through live performances, live shows, live streams, and those contributions are normally captured in the form of almost captured in like an emoji format. People could put a rose, you could put a diamond, you could put a heart, doesn't matter. That will then
That's
translate
it. It's like a
into
tipping sort of mechanism,
it's
isn't
a
it?
tipping model, and then
Yeah.
that can be translated into real money, and then placed into what I presume will be some sort of digital wallet that has a debit card attached to it. The other challenge as well has always been, from a content creator perspective, are they a tax risk? I imagine lots and lots of content creators have in the past flouted certain rules in terms of are they earning money on a platform? Is it being declared? And again, having a digital wallet and a debit card, which sits in the ether, will definitely create tax risk for the end users, which may be a reason for them to take or reject the product. But it's a really promising step, that content space, and the flows are enormous. I remember we worked with a company who processed billions and billions and billions of dollars every year, in tips and in subscriptions and in payouts, and it's a huge economy, that is only really serviced by a number of very small providers, and it's done under the radar. So this is a really interesting step for me.
I think, yeah, you're absolutely right, and it's really I mean, it's not that curious, but the fact that Visa themselves are the ones that are kind of partnering with TikTok here. I mean, not so long ago, not to kind of trawl us through the mud a little bit, but we heard about credit card processing being withdrawn for certain, high risk, adult focused websites, etc. I think there was even, a well publicized kind of about turn from OnlyFans. I think they were actually announcing they were going, essentially, PG-13, and they were eliminating all of their adult content, and then almost in the same breath, they reversed that policy, and it was mainly because of the things going on behind the scenes around the ability to actually accept and process these payments, and the card schemes appetite for being involved with it. um
Mm.
this is really interesting in terms of uh, TikTok's obviously a massive name, and I understand why Visa would want to kind of attach themselves and engage with this project. I think I mean, in Visa's own press release, they've kind of highlighted content creators are they are very vulnerable to late payments, to disruptions in banking payments, etc. So the fact that they're accentuating the speed here of payouts. So I think at the moment it's something like 1 to 3 days to get your earnings from the platform. I'm sure social media savvy people will probably correct me on this, but this is essentially being positioned as almost instant, in that you
Mm.
go from earning the revenue, or you're earning from your streams, etc., or revenue share on ads, or TikTok shop commissions, etc., to it going straight on the card, and as you said, being able to spend it
So
immediately.
they
So
they said
yeah.
41% of creators have turned down a business opportunity due to cash flow risk.
Wow. Wow.
So they've obviously
Yeah.
done their research and said to him, if we can give you a tool that will allow you to to collect payouts instantly, almost instantly, is that going to help you drive your business? So they're looking at it from a, how do we help these content creators build their business? And I imagine there'll be loads of other toolkits
Yeah.
in the background, to help them on the way. This is just going to be one part of it. Yeah,
I think
really,
I
really
think this
interesting.
kind of highlights as well. This is also TikTok turning a cost center into a revenue center, because obviously those of us that are sort of familiar with the economics of running a card program, as as TikTok would be in this scheme. They would be earning when not only are they saving money in terms of the overall payout mechanism, presumably, not having to do mass payouts to actual bank accounts, etc., and the associated costs that they would face doing that. They are also now earning any time that those creators spend on the card, albeit with it being a debit card, it's lower in terms of interchange, etc. But that's an interesting revenue stream. It would be interesting to see how significant that is for TikTok. But I
Mm,
think that's kind of what we see with embedded finance, isn't it? It's where non-financial businesses find a way to capture some of the value from the overall, from the transaction supply chain, essentially.
yeah,
And I suppose it's similar to conversations that we have with our clients and our prospects, where how do you not just make things work better for your customers, but how do you actually capture value from that? And it's I think it's a really promising sign, really, just generally outside of social media, etc. I think companies being able to run their own schemes, and to bring some of that in house, etc. You've got the loyalty piece, you've got the brand piece of having your cards emblazoned with your logo, etc., out there. But then also, you've got the financial, immediate sort of impact of, capturing some of those transaction
yeah. Because
fees.
TikTok have invested a lot of time and energy into, the TikTok shop ecosystem. So
Yeah,
merchant cash advance, which plays into the same kind of bottleneck, but it feels like they're building a banking infrastructure or system behind everything that TikTok is.
Yeah.
the social media platform, the shops, um, the live streams, and it makes sense. And if you can hit those hit those pain points on the head and create a solution in the background that will allow someone to scale a business through TikTok and not have to rely on other services, and you've got a revenue stream from it because you're on a program with another banking partner. I mean, it makes perfect sense. I don't know how many
Yeah.
users TikTok have got, but it's going to be, you know, it's going to be hundreds and hundreds of millions. And it says, I'm just looking now, the the digital economy is projected to sit at 500 billion by the end of next year in terms of transactional value. So there's, yeah, a couple of percentage points here and there.
Yeah.
I'm sure
It's
that'll
pretty significant, isn't it?
cover any
Yeah,
costs
exactly.
you promote. So yeah, that's really exciting. It'll be interesting to see how that develops over the next
Yeah.
few months. They're starting off in the UK, but presuming it works.
Yeah.
Actually, sorry, just before we move on. So the diamond withdrawal, which is their withdrawal mechanism when you convert emojis and gifts and tips, is only available in US dollars and only through PayPal.
Oh, wow. Okay.
Even users can allow,
Presumably this also covers that TikTok shop piece as well, I
yeah.
imagine. It's
So this,
probably, but
so
yeah.
in its current format, a money withdrawal can only be done in US dollars through PayPal, which creates currency risk for UK
Yeah.
content creators. And the terms state that you need to allow up to 36 calendar days, not 30, not 31,
Oh
36,
my goodness. So if
to
you,
receive
let's say
funds.
you initiated a withdrawal or whatever, February 27th, before all of the state of Hormuz, before Iran, and then suddenly, 1 month into the US Iran war, sterling dollars, been impacted, etc., and you're sort of sitting in a different sterling amount potentially that's
Yeah,
actually ended up being deposited. So yeah, that's
they've
interesting, isn't it?
that's them stating their own problem, and this is how they're going to fix it. So
Yeah,
yeah,
yeah.
exciting. And then the last one is Revolut.
Well, it's a big
This is
one. Yeah, that's it. You left it. You left the atomic bomb for the for the last item, but yeah, good for
seeking
you.
a $200 billion valuation, which is hard to compute as a number. When you look at some of what the tier one banks are worth, and I think you mentioned before we jumped on the call, it's intergalactic, it's incomprehensible as a valuation.
Yeah.
And moving them out of the banking space into something, into something completely new, which is ironic given that their original mission was to take on the banks, and now they are so big that they're almost swallowing the banks up
Yeah,
as they
exactly.
move.
They're going to have to be careful not to, paint themselves as the big bad boogeyman, aren't they? You're sort of the person eating everyone's lunch. But I think ultimately this is it's interesting for three reasons. First of all, is that this is coming quite hot on the tail. Obviously, they've been doing secondary share sales and everything for ex-employees, early investors, etc. They've been able, there's been various liquidity events. At the last one, I think it was $75 billion, and everybody was thinking, wow, okay, we're in Stripe territory now. Like these are the two fintechs that in terms of valuation. So it's really interesting that Nick Storonsky's come out and said, quite openly, first of all, around the valuation. Secondly, the time frame. He's never really been that explicit around the time frame they're targeting, but they have said 2028 now. So that gives them that runway in terms of like the roadmap for where they want to be and where they want to go. And as you said, like this is not, they're not really the valuation isn't based on them offering banking services. It's based on customer penetration in terms of can we activate a wider breadth of products, services across our existing customer base? Because I mean, I think they've got, in the tens of millions of customers. I saw 45 million. I don't know if that's accurate, but it's definitely, they dwarf lots of banks just in terms of customer numbers. So you do wonder how much more headroom is there. But I suppose that the final thing here is that this is also coming after the UK banking license was that they obtained the UK banking license, which had been long overdue, they would say, I'm sure. But it'd been something that was very tentatively sort of navigated because of some concerns about growing pains. I think at Revolut, I think they'd acknowledged that they had to scale their systems, and in some cases, it wasn't quite scaling the way that they wanted it to, and it wasn't delivering the right customer outcomes. I think they've probably allayed a lot of those concerns to a certain extent, of the regulators at least. And then the fact is that we're now in a situation where they are now looking ahead at, right, how do we build that regulatory footprint? They're looking at France, they're looking at the US. The US, they still haven't really cracked. So I suppose there is upside in terms of customer growth, geographic growth, etc. there. But it's really interesting that they're kind of putting their flag in the ground and saying, this is where we want to be. And I imagine that all of those regulatory processes are going to kind of, feed into that over the next couple of years as they scale up in France. I think they've committed another $1 billion of investment, commitment, 10-year office leases in Paris. So there's a lot riding on this. I suppose how do you think the average UK SME feels about Revolut, though? Because I know that we've had some conversations with various businesses. Like, what do you think, like, the sentiment on the ground is, in terms of, this stuff sounds great from a headline perspective, but apart from that, is this actually serving the end customer? Perhaps I don't know that they really care.
There's still, in my eyes, quite a big gap between an SMB somewhere between 5 and 30 million, maybe still owner-led or family-run, where they've probably spent the last 20 years dealing with a Lloyd's or NatWest, and they expect a certain level of personalized service, which has disappeared, and they've gone out to find new vendors. And there's other people that have popped up to try and fill the gap. People like Alica, now valued at £1 billion. But I think for a lot of those businesses, they're the typical or the stereotype FD, CFO, financial controller is probably not a product first individual. They're probably a service individual. The typical feedback that we see is that the tech and the product and all the bells and whistles within Revolut are fantastic, as you'd expect, because they've thrown absolutely everything at it. But that doesn't necessarily mean that you're going to get the most value out of it, because dealing with international business and dealing with payments, you often need someone there on the ground that can be there in real time and help you unblock whatever's got stuck. And you'll often see the chatbot gets a real hammering when people need to speak to someone. They're pushed into the chatbot matrix, and you may never come out of it. And the case will be closed and you have to reopen it. And it reminds me of having to deal, if you've ever tried to leave Sky or speak to one of your energy providers, they'll always push you into the chatbot matrix because there's a very high chance that you'll give up. And for them, it's not free. Obviously, there's a cost to running those programs, but it's a very easy way to herd multiple millions of people into a chat system. And for us, that's where the gap is. And I'm not saying that we can obviously fix everything, but there's a niche where a business sees value in that personalized service, which doesn't really exist anymore in that.
I think you're absolutely right. Yeah, I think the personal touch and actually talking to an actual human being. I think just to kind of, as a slight tangent to this one, it's interesting. Revolut, I've attended lots of Salesforce world tours, etc. They gave a talk a couple of years ago, and they were talking about how they leverage Salesforce and so on. Full disclosure, I don't know if that's still the case, but at the time they were talking about the AI capabilities of Salesforce at the time. And you imagine how far AI technology has come on. And obviously, Salesforce is one of those. I think they're rebranding to Agentforce at some point, or they were looking at doing that because of how embedded that AI push is within the wider business. And I'm genuinely fascinated to see, you were talking about the chatbot. I'm genuinely fascinated to see if they're going to be one of the pioneers of the voice AI bot, if you like, on manning phone lines to give people feeling the reassurance of, I'm speaking to someone, but actually not actually speaking to someone. This is pure speculation, by the way. I don't have any inside track on roadmaps. And actually, Revolut may come out and say, actually, we're hiring thousands of people to man those phone lines. But I think the fact is that whilst all this scale is brilliant, it is what happens when something goes wrong. And with that scale, unfortunately, you're very much kind of beholden to whatever the policies are, whatever, standard operating procedures are in place. And you don't empower the front line customer support with the agency they need to make things right for the customer. And as we've seen recently, like we've had a few instances where that is absolutely crucial, and it's not crucial until it happens. Really, it's one of those things. It's not really very high up the buying decision priority list. But it is a reason not to stay with someone when something goes wrong and they don't handle it well. So
Yeah.
yeah, fingers crossed. I mean, we wish we look at all of the businesses across our space, and with nothing, or a rising tide, lifts all boats, and we're excited by it, and we're excited to see what happens, and the perhaps the trends and the doors that this opens for other followers, if you like, of other businesses. But yeah, it is one of those things now where we're sort of in the super app category of your Alipays, your sort of China, WeChat, that kind of approach that they're taking. And unfortunately, when you go for that much breadth, you lose focus of what really actually matters to the people using your service. And sometimes they don't really want everything under one roof. They actually just want a really capable provider that can do that thing. And that's really where we've seen a lot of traction in terms of being able to match the right providers to the right businesses, find the right solutions, make sure that everybody's getting the best in class in that service, not just because they also offer it as well. So yeah, it is interesting.
Yeah.
Cool.
That was
Sorry,
great
that
chat.
was my little soapbox. I'll get off my soapbox now because I get quite heated when I think about all of these brilliant businesses coming up and everything, and the exciting future, hopefully, that it heralds. But I think there's a fair amount of risk there as well that we need to be mindful of.
Well, that's just under the half an hour mark. So hopefully it's
Oh, fabulous! There we go. So we're hopefully it's enough to bring people back. This was the inaugural payments paddock that we've done. So please do let us know what you think, what you'd like to hear or see. We will take feedback into account, and please do join us in 2 weeks' time. We will have the latest and greatest 3 top stories as chosen by us to run through. But otherwise, see you in a fortnight. Thanks, Al. See you, everyone.
Cheers, Greg. Take care.